Hello and good afternoon to everyone. Again, this is another webinar with Streams. This is Nak, your account manager. We're going to be covering today the theory of relative strength index, also known as the RSI. This indicator is actually a very effective indicator, which does show us good predictions on how things can be moving and should be moving. It'll basically show us overbought and oversold scenarios. It basically shows us the strength of the momentum of the different instruments that you're looking at. So we're just waiting for a few more, well, one more minute, guys, till we have some more people join us. There are already a few people that have joined. And we're waiting just for a few more because I know that a lot of people have registered for this webinar to actually join to understand how to use the specific indicator. So relative strength index, guys, I'm going to show you guys also how to use it. We're going to be first going over a few slides, basically the theory behind what it is. Also, we'll go through on how the result is actually created with the RSI. But then we'll go also on our charts in real time and basically follow what I'm doing and understand how to implement it on your chart. So let's all get started, guys. I think it's a good time to get started, and whoever joins next can actually join us. So again, do join us on the different links that we're on. Do join on the different social media groups that we're on as well, on Facebook, on Telegram. You can even find some of these videos also on YouTube and of course Streams. It is good to get onto also WhatsApp. You can find me also on WhatsApp, where I do have different groups where I do communicate and provide also my insights for the day. Moving on to the RSI, Relative Strength Index. Basically, the RSI, also known as what the technical indicator we're doing today, basically measures the strength and the weakness of the currency pair by comparing its upward movements versus its downward movements over a given period of time. So basically calculating the RSI level, where it is, has to do with previous candlesticks. We'll get more into that on how to calculate the periods and what results show from the RSI to see if something is overbought and people have exhausted that buying option, or if something is oversold and they've exhausted that selling option. So this indicator was created by J. Wallace Wilder Jr. And first appeared in 1978. Forex trading appeared basically in 1973. And it was online during 1992. This indicator was used back in the day in the 70s. This is how far back it goes. One of the first indicators that was created for trading, especially trading online. The Relative Strength Index, also known as the RSI, is a momentum indicator which is used for technical analysis that measures the magnitude of recent price changes to evaluate overbought and oversold conditions in the price of an asset. So an overbought or overvalued and maybe primed for a trend reversal or corrective pullback in price. An RSI reading of 30 or below indicates an oversold or undervalued condition. So when we have the RSI reading to us at around 30, guys, we know that something is oversold, meaning that those levels of demand and supply, people were all trying to sell that specific instrument you're looking at, and as they're selling, we'll see the RSI slowly moving towards that 30 and even below that 30. So relative strength index is basically a momentum indicator, which means that it is used to determine the speed and strength of the price movement. It is also used to identify overbought and oversold conditions, as well as divergence and hidden divergence signals. RSI is displayed as an oscillator, a line graph that fluctuates between two extremes. The oscillator is between 0 and 100. 0 and 100 on the RSI levels are extreme levels. This is basically where the area where the RSI is moving, and we'll get to show this as well with a few examples, guys. I will show on the slides a few examples, and then we'll move in real time, because I know that you guys all prefer real-time examples. You understand better on how to use also the charts. So I'll move really fast with these slides, get them over and done with, because they're not the most interesting, but it's, you know, these webinars are not just to, it's also to understand, you know, all about the specific indicator that we're doing, understand how it works and how to use it. So on a price chart, the RSI indicator is plotted as a single line that is calculated by combining the following information over a given period of time. So in order to calculate the RSI, you need to get the average gain during advances within a set period of time and the average losses during declines with a set period of time, meaning gain when you're having candlesticks that are closing higher during the day or during the specific time interval, and average loss, meaning that those candlesticks are closing lower than the previous, than the opening, of course, of the specific candlestick. Now, a ratio of these two values is used to create a measure that moves between 0 and 100, okay? The relative strength index basically confirms where there's a new trend. It also suggests when a recent price move might be reached, meaning overbought and oversold. So you have those peaks, as we call them, and those troughs, the low points of basically the instrument we're looking at, which is an oversold level. And of course, to warn us about potential price reversal due to the divergence between the actual price and the RSI indicator. So usually when you have something oversold, guys, you need to be aware that there could be a change in people's perception. They might actually start buying the specific instrument. If people are starting to buy, then they're driving the price up. People are selling, they're driving the price down. It has to do a lot with market sentiment, which we did cover this in a few webinars before. Market sentiment is something very difficult to measure. People, you know, it's something that we cannot measure, as we say, but here with market sentiment, with using the RSI, you can actually measure the past demand and supply, what people were feeling at the time, you know, if they wanted to buy and drive the price up or wanted to sell. You guys will see now the RSI formula. So remember I told you the average earnings over the average losses. This is basically the formula for it, so that you guys can understand. The number 14 here is a 14 period RSI. So I'll read now so you guys can understand the example as well on how to calculate the RSI. So basically gaining the average gain or the loss used in the calculation is the average percentage gain or loss during a look back period. So in this case, it's a 14 period, which means if you're looking at a day chart, it's 14 days, going back 14 days. If you're looking at an hour chart, you're going 14 hours back. You'll see some candlesticks that are basically earnings that are closing higher, or you'll find some candlesticks that are in a loss, which if you calculate these two together, and you get the average of each one, average winnings and average losing days for that instrument, you will come up with this kind of formula, which is on top. And when using the 100, basically the 100 level, which is the highest level on the RSI, it will give you a nice calculation, which here we can see the RSI is 55.55. The formula uses a positive value for the average loss. Okay, we have a positive here because we do have the average winnings, this 1% over a few days was higher than the average losing candlesticks, which was 0.8% basically. So the standard is to use a 14 period to calculate the initial RSI value. Okay, this is the standard on when you open your chart, you will see that it is always at 14 periods. So 14 periods, meaning, remember, you're using an hour chart, you're going 14 hours, you're looking at those 14 hours. You know, some of them will be closing higher, some of them will be closing lower, and basically taking that average will come up with an RSI value. So for example, imagine the market closed higher 7 out of the 14 days with an average gain of 1%. The remaining 7 days all closed lower with an average loss of minus 0.8%. So the calculation for the first part of the RSI would look like the following that we're seeing on top. Okay, this would give you the calculation. Now there's a second part to the calculation, guys. Okay, I'm moving fast because knowing how to calculating it is not as important as using the RSI. I mean, the RSI calculations are all done automatically by the systems. All you guys need to know is what are the levels, what are the readings of those different levels that occur in the RSI. So once there's a 14-day period of data available, the second part of the RSI formula can be calculated. The second step of the calculation basically smooths out the result. So it basically smooths out your RSI as well, meaning that you won't have too many sharp edges of those highs and lows. So this formula is similar like the top one that we just did before. The only difference is now you're calculating with a 13-day previous average gain times 13. This is again for a 14-period RSI, but plus the current gain, meaning current gain, the specific candlestick that you're looking at. All right, so the RSI will rise as the number and size of positive closes increases. So if you have more closes that are at a high than ones that are decreasing, candlesticks that are decreasing, then you'll have a higher RSI. So if you have more candlesticks that are gaining than the candlesticks that are losing, then you'll have a high RSI, which is above 50. So, and it will fall as the number and size of losses increases. So this is what I was saying. If you have more losses, then the number will decrease when you have more losses. When you have more gain candlesticks, then you'll have that number increasing. So don't worry about the calculations, guys. They're not important to calculate your own RSI. What is important is to use the levels. Now, the second part of the calculation smooths the RSI result. So the RSI will only be near 0 to 100 levels in a strongly trending market. And we'll move on to the next slide. Relative strength index. Okay, readings over 50 indicate price movement that is generally rising. We'll go through those levels. Reading below 50 indicate price movement that is generally falling. So the RSI is considered oversold when below 30 and overbought when above 70. Okay, so there are three primary areas to consider. 0 to 30 is oversold area, meaning that everyone has been selling for a while. They've exhausted that selling option and will soon maybe start looking maybe for a buy option, maybe depending on market conditions. 30 to 70 is a neutral area, and 70 to 100 is an overbought area. Now, guys, do remember that all indicators that we're using, they're not, guaranteed that you'll be successful with your trade. It also depends on market conditions. It also depends on the fundamentals that are happening out there during the day. This is why we need to look at our economic calendar. And most indicators, they're used more effectively when the markets are maybe a bit quiet. The only problem with the markets being a bit quiet is that you don't have very big moves, which could take some time until you earn a good profit. So the only thing is that the indicators, they work, I think, much more effectively during the quieter times. The only thing is that you don't earn as much during quiet times. This is the only issue. So the default period setting for relative strength index is 14 periods. Okay, this is what we mentioned before, guys. This is a standard. You can change it to 9 periods. You can change it to 20 periods. People use the periods differently. Traders do use different values, typically ranging from as low as 2 periods, which is basically 2 candlesticks. This is for usually higher or longer time frames, like weekly charts, for example. And some people use even 25 periods time frame, which is basically for short time frames. Time frames that are, for example, an hour, half an hour, 15 minutes, and even 5 minutes, and even a minute. But okay, a minute, estimating how the market will move in a minute is not so easy. It's usually mostly by scalpers. Scalpers love using the RSI. So what we mentioned before, anything above 70 is an overbought area, guys. In between 70 to 30 is the neutral area, but I'm going to show you also levels in the neutral area, what they symbolize and what they mean. The oversold area is when they've exhausted the selling, and we've seen that something has dropped quite a lot when it's below 30. And a good example of here, again, of an overbought and oversold scenario here, we have the 70 level, the green line on top. And at the bottom, we have the 30 level at the bottom. You guys can see that when reaching the peak of the 70, we see a small drop. You can also see it on top how the candlesticks are forming. This is on a 5-minute chart, fast-moving chart, fast-moving RSI. Here we see the scenario where we're looking at the drop for the specific instrument, which is the USD JPY in this case. This drop here, this was a while ago, of course, a few months ago when we saw these levels. We can see that as the US dollar drops, okay, we can see that it reaches the oversold area and then starts shooting up again. Okay, this is what we call an oversold area. Now, overbought and oversold areas, okay, you usually have some kind of a trend reversal, guys. So what we're covering now is how to trade the RSI. So the upper range above 70 indicates overbought conditions, meaning that everyone has a demand for that specific instrument. If they have a demand, they're all buying, driving the price up. They drive it all the way to 70 and above 70. Above 70 means that it's overbought, should be looking for some kind of a correction. All right, correction meaning to either retrace or reverse. Okay, retrace means for a short period going in the other direction. Reversal means a longer period of time of a change in the direction. So the lower range below 30 indicates oversold conditions. Again, no one wants to hold that specific instrument. Everyone prefers to be selling that specific instrument, and because everyone is selling, they're dropping the RSI as well, because you have more candlesticks that are closing at a lower point than they're opening. And when this happens, you have the RSI that even goes beyond 30, reaching levels of even 20. That's when you know that it's oversold. Should be looking for some kind of a retracement, some kind of a reversal maybe, in order to stabilize again, which is normal. Markets don't only move in one direction, guys. Remember that. Markets do fluctuate, and it's all a matter of catching your trade at the right time. Like if you want to take, for example, a buy, try and take it when the instrument is at a low. It's what we always say: buy at a low and sell at a high. Is this concept of using the RSI? So an overbought signal suggests that the recent price rally may be ending for the time being, and price might soon decline. Okay, so you have overbought, price might start declining. Now, sell signals. The sell signal occurs when the RSI rises to an overbought level of 70 and then falls below 70. Downtrend alert. Okay, we have a downtrend alert, trend confirmation. A sell signal occurs when the RSI is previously above 50, okay, and then falls back below 50, bearish divergence signal. Okay, we're going to go also through the 50 signal as well. Moving on really fast, guys, because we need to get onto our charts. A sell signal occurs when a bearish divergence between the price chart and the RSI indicator forms. The bearish divergence is when the RSI makes a lower high while the price makes a higher high. Okay, so an oversold signal now signals that a recent price decline may be ending again, so you have it oversold, and there might be some kind of a rebound in order to stabilize that price. So a buy signal, oversold signal. A buy signal occurs when the RSI falls to an oversold level of 30 or less and then rises back above 30. So once you start going above 30, okay, so you first reach 30, you go below 30, then you start going up again to 30 and above 30. That's usually a buy signal. Uptrend alert, trend confirmation. The buy signal occurs when the RSI is previously below 50 and then rises back above 50. Okay, that's when we start seeing a trend, as we call it. I'll show you guys again as well the 50 mark. Bullish divergence signal, trend reversal. A buy signal occurs when a bullish divergence between the price chart and the RSI indicators form. A bullish divergence is when the RSI makes a higher low while the price makes a lower low. Okay, again, this is when we have it oversold. We need to try and get into those trades, those buy trades, if possible, and to watch our trades carefully. So the RSI indicator can stay in an overbought region for an extended period of time, okay, while the asset is in an uptrend. The indicator may also remain in oversold territory for a long time when the asset is in a downtrend. This can be confusing for a new analyst, but learning to use the indicator within the context of the prevailing trend will clarify these issues. So we're going to clarify these issues now with real time. But you know, this is why I say it's not always concrete. Then when something is overbought, it's a good time to sell. It depends on also the overall trend, guys. So if the overall trend is upwards, okay, and we're seeing that the things have been moving up for quite a number of days, for example, trying to take a sell position because something is overbought, say you see it on a 1 hour chart, is not so easy because you have an uptrend. And I'll give you a good example of this with what we're looking at right here. We're looking at right here the pound versus the USD. To find the indicator, guys, you need to have your navigator open. Go to navigator, go to the indicator list. This is my indicator list, and boom, here is the RSI. You just double click on it and it will open for you like this. You'll see, and you can adjust from the beginning even the colors of your RSI and the levels. Okay, so this is an RSI. I'm going to close this because we have an RSI at the bottom. I've already added it so to save time. Okay, but as you can see here, I have my levels on the RSI at the bottom of my chart. Okay, we have a 50 level, which is a midpoint, guys, crucial point for the RSI. We have the 20, which is the lowest level. You can even have 10 if you want. I usually keep it on 20. Okay, 30. And then we're also going to add the 40 level and the 60 level because they are important for trends. Okay, trends are a big part. So in order to add them, I just go to levels, I click on add, and I'll put 40 here. And I'm going to also add a 60 level, which is very important in order for us to identify a trend. So you guys see different levels. Majority of people just use the 70 and 30 level. These are usually new traders that don't have a lot of experience, and because they read some things that don't explain thoroughly the RSI, they just use the overbought and the oversold scenario. So basically, we've added our levels, and currently we're looking, let's go on to a 1 hour chart. All right, so we have, as we're seeing here, the pound versus the USD. And before we get started, we need to see the overall trend. So whenever you're looking at some instrument, guys, always go first to the overall trend. Going on to a weekly chart, and boy, oh boy, you can see how that pound has strengthened against the US dollar. It's incredible. It's not only that the pound has regained its strength again through the pandemic that we saw in 2020, but it's also that US dollar that has unfortunately flunked. US dollar is not such a high demanded currency as we thought it would be during these crisis moments. And we see low levels of the US dollar. You can check the US dollar index out, guys. This is the US dollar index. You can see as well, quite a number of days, the US dollar has come down quite a number of even days. And the reason being is also we do have the New Year, Chinese New Year tomorrow. This will, I think, have some kind of an impact, of course, also tomorrow is Friday. Usually the markets on a Friday, you do expect some kind of surprises due to because a lot of major institutions and a lot of traders and big traders and professional traders do try to get out of their positions before the weekend. So this is why you see some kind of strange fluctuations during Fridays. It's not a bad thing. It's just how the markets are, and due to that, a lot of people are closing a lot of their positions on a Friday. It does create some kind of difference on the way that things are moving. So today we're looking on a Thursday. Okay, so pound USD, we're seeing that a number of days we've seen this uprise, maybe even for months. We've seen on how it's been moving for months. This is accompanied by months. We can see our RSI basically down here that it's just going above that 50 mark. So remember, guys, going on an uptrend from down to upwards, as we can see, past that 50, here's my 50, past it, and even above that 60, there's a good chance that on a monthly that we should see it even higher to where it is today. But looking at a monthly chart means that you have to calculate 3 to 5 times. That would mean around 3 to 5 months you should see logically the British pound versus USD higher. We can see this from the RSI that did start out very low, near that 30 level over here. When was it? It was in 2019. And ever since 2019, we've seen it trying to rise, and it dropped down again. It's trying to rise. You can see an uptrend basically, guys. And on the RSI, it's indicating that there's more room for it to go higher, but it will take a long duration of time. That's a long-term trade, as we call it. So going on to a weekly, again, we can see something of the similar nature, but here we see that it's on 67 on RSI, going towards at 70. Most probably it will reach at 70, and is more favoritized on the upside on the long time frame. So a weekly means 3 to 5 weeks, we could see it even higher. And on the daily here, we see that things are flattening out for that pound because it has reached quite high levels as well. But you also need to see the past and how things are in the past. And you can see that the RSI hasn't been touched a lot on the 70 levels, as we can see here. So we can see that its high RSIs on a daily is at around 66. Here we have it on a 64 today. So that 66 level to the 64 means there's a bit more room for it to rise, most probably. But again, this is today's Thursday, so maybe by Friday, by tomorrow evening, maybe we'll see it higher. Maybe this is what the RSI is implementing, that it can go a bit higher, but as you guys can see, the RSI is flattening out here. So it is also a signal to be a bit careful. Just in case we start seeing it to move down, because the highest levels for the RSI in the daily is 66, as we've seen. So moving on to a 4-hour chart, and here we do see an overbought scenario. We could take our right over here, go down, and you can see that it did reach 75 level. That is an overbought level. We can see the downward move, downward descending RSI. And as you guys can see, it's on a 61 level. There's a big chance it's going to reach the 50 level. The 50 level will be crucial. It'll either bounce or off that 50 level, because it does work as a support or resistance level. Remember, guys, we've covered support and resistance levels on our charts. The same applies also for the RSI. This 50 level works like a strong support and resistance level. And here's one good example where it did come down. RSI also came down, touched that 50 level about, then jump back up again. You guys can see it very nicely here for the pound USD. And now we can see that it's approaching that 60 level. Most probably it will break that 60 level downwards, but it will take, of course, this is a 4-hour chart. It will take quite a number of hours, and even nearly a day maybe to come down to that 50 level. And that's if it does come to that 50 level by tomorrow. But apart from that, you can see that reaching its peak, that highest point of 75 on the RSI, which is very high, we see a descending RSI. So going again to an hour chart, all right, we go trading more short term. Again, you can see those high levels of 80. 80 is a very, very high level. It is somewhat of a good time to sell. And you guys can see up here, you see how it's been moving over the time period, over the hours. RSI is increasing because there are more bullish candlesticks. Because there are more bullish candlesticks, you can see from here to here, like this RSI here to here, moving upwards very nicely, all the way to the levels of 70 and above. 70 and above, remember guys, is an overbought scenario. Should be looking for some kind of a sell position rather than a buy. This is on an hour chart, and you can see how the pound USD is what we call ranging. So you can see it now flattening out, up and down, up and down. And on the daily, if you remember, guys, we saw that the RSI was flattening out. This is a good indication that there could be some kind of even a retracement or even a reversal, I would say. And looking at our RSI, you see how, again, this 50 level played as a resistance level now. It touched that resistance level and came again a bit down. You guys can see it over here. Let's see if it'll go further down towards that 40, but a good example is it touched that 50, didn't break the 50. If it broke that 50 and came up to say 55, there'd be a good chance of it going to a 60. And then from the 60, if it broke it and went to 65, 63, then you'd see it go to 70 again, which would signify the overbought. But here, the scenario didn't break it. It bounced off it and came a bit down. Let's see if it goes back to that 40 level, but you can see on how things reverse on the different levels. Here there's a 40 level, touched it and reversed back up again, touched that 50 level, and then reversed back down again. So these are somewhat like support and resistance levels on the RSI. This is why a lot of people don't use the other levels, because they don't know that those levels work as support and resistance levels, which again, guys, you can check my other previous webinar on support and resistance levels. It's something similar to the RSI, support and resistance levels. So going on to shorter time frames really fast, guys, we can see that this RSI here is trying to indicate to us for the next 3 hours. It might be more favored on the downside, but we need to be careful. 50 level is a crucial level, as I mentioned, guys. Sometimes it's also better to wait and see, you know, if it continues further down, if it comes down to around 44, then okay, you can take your sell position, I would say. But let's go on to a 30-minute really fast. Okay, 30-minute, you can see your RSI, it changes. Each time frame, the RSI is changing. So if you go to the longer time frames, okay, you can see, let's go here, that it was overbought before. Here we can see that it's descending, that it's in a neutral area coming down. Now going on to the 30 level, you can see here that RSI, not clear direction. This is why I said to you guys, wait just a bit. Don't be in a rush to take any sell positions, okay, because we're on the uptrend. Remember, going on a sell now is not so easy, because on a general view, we're uptrending, guys. So looking at it from here where we are, we would actually need to wait to see how the RSI reacts or how the market reacts. We'd rather wait to see if it breaks that 15, goes up, or if it comes down to that 40 level. If it comes down to the 40 level, I think there's a high chance of it going to the 30 level. This is on a 30-minute chart, so 30 times 3, that's about 90 minutes. 90 minutes to about 150 minutes. If it breaks that 40 mark, I would say, then yeah, take the sell. But going on to a 15-minute chart, and here's the interesting part. 15-minute chart is showing me that it might start rising as it went near that 30 level. You guys can see as well here on your previous levels that the RSI at 32, instead of reaching 30, started shooting up again. So again, this might happen again. History tends to repeat itself, as we say. This is why I said to be careful not to take that sell or that buy just yet. You can see how things are moving at the moment. They're not sure on how things will either move up or down. That before the RSI, a few minutes ago, we can see actually nearly 2 hours ago, RSI was near that oversold. They've exhausted the selling here, as you can see, and everyone is trying to reverse it back up. People are trying to buy. They're finding a good position. They found the low position right here, and now people are trying to buy. They did buy for a while, but they stopped for a minute, and now they're thinking again. Going to a 5-minute, you can see, guys, here before, as I mentioned 2 hours ago exactly, it was oversold. We saw a big drop there for pound USD. All right, this is normal on the short time frames, where you will see pullbacks or retracements, as we call them as well. For a short period of time, it did come a bit down from all the way of the high RSI where it was at high 70 level, came all the way down to that 30 level, and now it's trying to rise again. So maybe I believe it would actually rise for now again to those high levels in the shorter time frames. And in the 1 minute again, you can see that the RSI is struggling to actually break that 50 level. If it breaks that 50 level, comes at around 55, guys, I would say you can take that trade, but it would have to be only for a short period of time, that buy position, because you're looking at a 1 minute. So it only have to be for a few minutes, open your position and just take your profit if it goes a bit above that 55 level, which can happen in a minute or two, can happen to go above 55 very easily because it's on a minute chart. The RSI moves much slower on the longer time frames. The shorter time frames moves much faster. So if you're trading with shorter time frames, remember not to leave your positions for too long, unless you're looking also as well at the longer time frames, and it's giving you a good signal that yeah, it should continue up. So that's it for the RSI, guys. I think you guys understand the concept of overbought and oversold. When you're too high, remember, don't take a buy position. You're too high on the RSI. Try and look for the sell, like over here. You saw how it was on that 70 level from up here, and then boom, a big drop all the way to 30. And again, now when near 30, then people are starting to buy. On the 15-minute chart, Again, not so clear, and you guys can see how it's ranging up and down, up and down. No clear direction just yet, but more on the upper side because of the 15-minute chart that we saw reach this low. Might try and repeat itself like it did in the past. So any questions you guys might have to me, just let me know. Just email me on webinars@gostreams.io, or just email me directly. Or if you guys want, you can also find me on WhatsApp, or just leave me an email. You guys, a lot of you guys have my email address. It will be great to hear for any questions you have. Thanks for your time, guys. You guys were great, and I hope that the RSI does help everyone. We'll talk soon, everyone. You have a great one now. Take care. Take care.